Everyone, and welcome to your Daily Five. I'm Michelle Schneider, Mish, and I am once again always grateful to StockCharts TV for giving us this time together. So what we're doing this week is really launching earnings season for this quarter. And it's a pretty big week because we've got a myriad of different types of industries reporting. The prevalence, of course, is on banks. And the banks are going to be very tied to the Coinbase IPO. So I thought it would be a good idea to be taking a look at a couple of the banks. I did a big one last week for StockCharts where I really delved into them, and especially those that have cryptocurrency present. But we're also going to branch away from the banks, and we're going to do from consumer staples to technology to retail to commodities to infrastructure and trucking. So as always, I'm very ambitious in terms of how much I want to cover in a short period of time, but I think we can do it. So here are the symbols that we're going to cover today. I'm not going to go through them. We'll just get started right away. Now, as I'm recording this with you, it's actually Monday and the market is under some pressure. There's a lot of news floating around. The biggest news right now is that there is some issues going on with Russia and the Ukraine, but also there are issues now with China and the United States, as China is speaking very aggressively towards the US in terms of its competitiveness. And so this could be a factor in the overall macro. We're seeing at least the Russell 2000 down 1% as I'm talking to you, NASDAQ down about 0.5%, SPY and the diamonds down about 0.25%. And the reason why I'm mentioning this is because it's always important, no matter what stock you're looking at, no matter how good a shape it looks like in the chart, there are always going to be things that go counter, but one must be wary of the fact that at some point gravity takes over. So we're going to start here though with something that is reporting, and this is Blackrock. And Blackrock has a lot of different influences here. Not only, is it a banking and asset management type of company in the financial sector, but it also has a crypto's presence. So if we're looking here at this one, I obviously would be waiting for the report to come through, but it's in very good shape going into the report. So there's a couple of ways to look at it. In terms of the momentum, it's doing well. Not as great as it was here, even though we're at a higher price now. And you can see in terms of the leadership, it's doing well. So this would be a type of situation at this point now, is if the earnings disappoint and it got to move, let's say, down closer to about 730, 740, that would be one thing you could use the 50. Otherwise, I would almost anticipate the possibility of this gapping higher after earnings. And if that's the case, then essentially what you do if you're interested in trading this is you employ gap rules, which means basically you buy it on the gap up. You can do it after 2 minutes or 5 minutes opening range. Some people like to wait for 30-minute opening ranges to see whether it gets follow through. But very simply, if you're looking at it as an active trade, you just put your stop with a little bit of fudge under whatever the low is of that gap day. So that would be something that looks really in good shape. Now, another bank here is Wells Fargo. And the reason why we point this one out is this reports on Wednesday, which is the same day the Coinbase IPO is, by the way. So that may take a lot of thunder, but it reports after the close. So we actually have skin in this game, as mentioned on my last video. And again, momentum not doing quite as well, but certainly not any divergence. It's still over the 50-day moving average, and the leadership is sort of on par with the benchmark of the SPY. So with the market down as I'm speaking to you, WFC or Wells Fargo is actually slightly green. So at this point now, I would really want to see this hold 38.39. I wouldn't give it much more room than that. Generally, I like to say if you don't already have a position in a cushion, you wait till after the earnings. And I do believe that I would even consider paying up for this over this recent high of 41.54 if it does gap up, because I see the potential in this to at least 45, maybe even as high as 48, which is where you get into some weekly resistance. The next one is departing from banks. And this is Pepsico. So this is a consumer staple, also reporting this week. No leadership here, holding on to the real motion momentum. So it's doing okay, sort of in line. And interesting, after actually having a death cross where the 50 crossed below the 200. This is trading not in a bullish phase, but this would be considered an accumulation phase unless we get the 50 back over the 200. So at this level of consolidation, I think you'd be looking at 140 as your nearest support. And if we clear these recent highs of 145, then I think as a consumer staple, especially if it reports well, this could actually have a lot more upside. So all of these are good so far to keep on your radar after they report. The next one is IBM. IBM is extremely interesting right now because again, you could see momentum is good, leadership is not. But this also, what you can see here is a weekly 200-week moving average that comes in at around 136, 136.50. And so this is red on the day right here. But if it gets through on the earnings, gaps over that 136.50, then I think after this huge base that this has been developing now for about a year since we had this swoon, that could really bring this a lot more upside. So I would say that this and WFC are probably two of my favorite post earnings to look at so far. The next one is PLD. And this is real estate and REITs. And again, doing very well, not leadership. Momentum is okay, not amazing. But once again, we get through this 110 level after earnings, and I see no reason after this huge consolidation period that this can't go higher. So what's interesting is we're starting out earnings week with some real strong contenders. Now, on the flip side of this, this is in the medical marijuana space. This is Aphria. Well, it's really basically tobacco and medical marijuana. And this actually reported already, I believe, as before I started this video, and you can see that it had a gap lower and the momentum is weak. So now at this point, you would not certainly be looking to buy this. I don't know if I'd necessarily be looking to short it either. But what I would say is if it holds this low here at 1378, with today's low that I'm talking to you at 1392, clears back over 15, it is a weak caution phase because the slope on this 50-day moving average is still positive. And then I think you would at least know that you could either give it down to these lows here if you wanted to, or very quick type of trade, risk to under 1378. The next one is Fastenal. Now this is a more industrial, tied to the Russells. So this now is not unbelievable in momentum. It's doing okay in momentum. And then if you look at the leadership, it's definitely not showing leadership here. And now as far as the actual price chart, we've got a top here and a top here. So really it needs to get through this 51.50, say call it 52. So again, after earnings, that's what I would be looking for, because again, all this sideways consolidation it's had is really a positive sign to give it the muscle to thrust forward if it continues to report well as we go into the week. Now, if we go into consumer discretionary, we're going to look at Bed Bath & Beyond. Look at the momentum here. It's weak, it's under the 50, while this is sitting on over the 50 in price, but the slope is negative. This to me would be one that I would actually say, if it doesn't report well and it breaks down under 28, 27, 28, you could see a quick short type of opportunity down to the 200. Otherwise, this would really have to convince me with some momentum increasing and a price move back over 35. So you can see that even though the retail space has been strong, this company continues to struggle. Now, if we move over to Alcoa, which is more commodity related with aluminum, this also reports on Wednesday. It's sitting right on the 50 while the price is above and then not showing leadership. So this, I would say, again, if this clears 35, I think it just goes in line with the overall industrial commodity space as being very strong. Otherwise, I'd be looking for a dip closer to about 27.50, 27. And then finally, we've got JB Hunt, because I wanted to show you something that was in the transportation space. And this too, momentum is good, not showing leadership right here, trading near these yearly highs. And again, this thing clears over 173. This can continue to go up. The risk is a little dicey on this one, but nonetheless, again, gap rules would be in effect. And otherwise, I'd be looking for a dip somewhere around 60 with a risk down to under that 50-day moving average. So that's something for us to look at as the week goes on. I hope this was helpful. You all have a great day, and thanks so much.
Hey guys, Dave Keller here with StockCharts.com. Thanks so much for watching our video. If you enjoyed it, and we hope you did, hit the like button right below. Also, we have so much new content every day. Consider subscribing to the channel. Just hit the subscribe button in the video or right below. Thanks for watching. Stay safe. Have a fantastic day.